Now presenting John Kiernan with Alico Incorporated. Welcome.
Good morning. I'm John Kiernan, and I'm proud to be the CEO of Alico. We're a public company listed on NASDAQ with the ticker ALCO. Our market cap is around $215 million yesterday. Alico is a 125-year-old agribusiness located down in Florida, focused on growing citrus on approximately 49,000 acres of owned land, and is also active in the entitlement process for future potential real estate development activities. As a citrus company, in recent years, we've grown billions of these, which we've sold to Tropicana to make their juice. We believe that we're the largest citrus grower in the United States with huge cost and scale advantages and excellent fruit quality. In recent years, we restructured the company to position Alico for long-term growth and are rebounding from the impact of Hurricane Ian in 2022 with millions of trees which are able to benefit from oxytetracycline treatments to start to mitigate citrus greening damage. Our senior leadership team is stable, tested, and focused on operational efficiencies, prudent capital allocation, and increasing our asset utilization to improve returns on capital for all of our shareholders. Let's talk about how we're doing that. Better? As I mentioned, Alico is a 125-year-old company. We own approximately 54,000 acres, 54,500 acres of land, all located in Florida, of which 49,500 acres are citrus groves. We also own 49,000 acres of oil, gas, and mineral rights, either in whole or in part, all located throughout the state. Our main operations are citrus production and land management. And what that means really is citrus cultivation, management of our groves for third parties, and leases for grazing, farming, and other mining activities. And here's the takeaway. Alico seeks to provide you, the investor, with the benefits and stability of conventional agricultural investments, and we combine that with the optionality that comes with active land management on the long-term potential of what 54,500 acres of land would be potentially down in Florida. Here's a brief snapshot right around Tampa, going all the way across the state. We are in the center of the state. And as I mentioned, we've got about 49,000 acres of citrus that we own and operate every day. We're located in about 31 different locations. We're in 7 different counties, so we are geographically diverse. We are one of the major landowners in the state of Florida. We definitely know that we're the top citrus grower. And we've been recognized for our outstanding caretaking practices by some of our competitors coming to us. And right now we're basically leasing land from them, or we are being retained as third-party caretakers for about 3,300 acres of other citrus groves, which are completely reimbursed to us for all operating expenses, and we make a management fee on that. So it's a different revenue stream on top of our existing proprietary citrus operations. If I had to leave you with a takeaway today, our enterprise value is about $300 million. We've got about $80 million worth of debt. And we believe that the market value or the replacement value for the land that we have is substantially more valuable than what our market cap is today. How do we back that up? If we look at just recent citrus sales, these are competitors who sold out in 2023. The average prices are somewhere between $8,000 and $9,000 per acre, which again is where we said we thought our price was coming out somewhere between 8 and 10. And the 10 is because we do a better job of taking care of those groves, and our groves are much larger and typically contiguous and adjacent to existing properties. We also own substantial real estate in those 7 counties. One county is called Polk County. And Polk County was actually designated last year as the 5th largest population move in the United States. This isn't just us saying this. This apparently is the U.S. Census Bureau, but we own 7 different properties in Polk County, which again is a population growth area in the United States. Since 2017, we've really focused on our core operations and our core assets. And we've determined if it's not core to us, it is no longer strategic, and we'd be willing to part with it at attractive and opportunistic prices. So we had a 69,000 acre cattle ranch that had been with the company for probably 100 years, very low basis, and it was no longer core to us. We'd gotten out of the cattle operations, and it took us about 5 years to sell in different parts. But at Christmas of last year, we finally sold the remaining part. It was a very large parcel, about 17,000 acres. We sold that to the state of Florida for about $77 million. And why is that important? Because over the previous 5 years, we sold about 69,000 acres in total for about $226 million, and we did that to about 25 different buyers. Why is that relevant? Because we own 31 properties in the state of Florida that own about 54,000 acres of land. And that same discipline and prudence, if we ever decide that we're going to liquidate underperforming citrus assets, goes against the track record that we had as basically being successful in patiently selling underperforming or non-strategic cattle land that the company had owned for 100 years. Now, you should rightly ask, what'd you do with the cash, man? Well, we've been substantially basically returning capital to shareholders and to our debt holders, as well as reinvesting in the business. Approximately $196 million have been returned to our shareholders and our debt holders since 2015, including $94 million since the beginning of 2021. We did that through substantial dividend payments. We've been paying dividends consecutively since we went public in the pink sheets about 1960, but we did skip 2 quarters during the oil embargoes in 1974 because management got cold feet. But we've been a constant dividend and consistent dividend payer ever since. We did have a very high dividend. We were doing about $2 a year that we had to stop in 2022 following the hurricane that affected basically our entire operations because we didn't have the cash flow to support it. But we are still paying a dividend today of about 20 cents. So we had reduced our dividend about 90%. We have done buybacks since 2015. We've done twice. We also did a tender offer that basically brought back about $26 million worth of stock back in 2018. But most importantly, we've been delevering. And we think delevering is very important because we would like to actually get this down to a very prudent level that makes the company bulletproof on its balance sheet. And we think we're pretty close to that right now. We've targeted about an $80 million debt level. And right now we're about 85 at the end of this most recent quarter. We started out about $205 million worth of debt that came about through 3 acquisitions that the previous management teams had put together back in 2013 and 14, where they acquired 3 businesses and folded them into a public shell. But here's where we are today. So we talked a little bit about this, Tropicana orange juice, which is great. Tropicana is our #1 customer. We are their #1 supplier. And most importantly, you'll see that we're on the far end of the spectrum on the supply chain. All that we do is we grow the oranges, guys. We are the farmers. And the neat part about that is we're not really tied to any consumer or supply trends. We just grow the fruit on trees that we take care of every single day. Tropicana buys it from us. They bottle it, they process it, they distribute it, they put it in the retail consumer chain, and eventually it winds up on your breakfast shelf. And this is called not from concentrate. If you're my age, you might remember growing up around the breakfast table, you used to get the cans of orange juice that were frozen and you dump 3 cans of water and you stir it in. In the 80s and early 90s, came out with something even better. This is the opposite of that. This is called not from concentrate. It basically never had the water taken out of it. And you can get that year round because Tropicana does a great job of storing it during the year-round season. It is a great product. It has the #1 market share in the United States. It's got about 36 or 37% market share with consumers. And it was previously owned by Pepsi. Tropicana Brands is now owned by a private equity company called PEI, based out of, I think, Paris. Hey, Paris. But it is a great investment for them because they're intending to roll up kind of juice brands throughout the world. They've been successful with ice cream previously. We've met with them. We love them. They love us. And we think it is a great strategic partnership. So although we only have 1 customer right now, pretty big customer, they're doing really, really well. And we're trying to do our best to keep them supplied with fresh oranges so that they can squeeze their juice. How do we do that? Well, one of them is basically we are committed to the industry, and that means that we keep our acres basically producing every year. The trend right now for Florida agriculture, because of the demands from consumer and residential real estate development activities through the population expansion coming from other states coming into the state of Florida, is basically to sell out. We have not sold out citrus land to residential or commercial developers, although we are looking at potential entitlement activities on some of those acres. We are producing more acres than we have in previous years, and we do that because we've been investing in our trees. So our leadership is unquestioned. We have about 5.5 million trees. In recent years, we've put more than 2.2 million trees into the ground. So we are expanding our production capacity, and that literally is putting money where our mouth is. We entered into a pilot program with one of our larger competitors, where we're managing 3,300 acres for them on a third-party basis, and they pay us a fixed management fee per acre. So that is cash in our pocket. They basically reimburse us for every expense that we have to do. They came to us because we're the best operators in the world at managing citrus, and we can do it cheaper and more efficiently than they can themselves. We are also continuing to expand those caretaking opportunities as we see fit, but they have to be the right thing for our reputation, and they have to be the right thing for our shareholders. And last but not least, we want to make sure that we manage our cost base. We do have volatility on our revenue. A lot of that has to do with Mother Nature. Hurricanes do wreak havoc. We're coming off a somewhat disappointing season. That's 2 seasons in a row from the hurricane, but we think that is behind us now. And one of the reasons for that is we've got a great workforce. Unfortunately, over the last several years, you've seen a substantial increase in kind of the prevailing wage for minimum wage workers. So all of our wages in Florida, particularly in the agriculture space, have been inflated. And we've tried to manage that by just being much more efficient with our operations, but we have seen our payroll costs go up. So tree by tree, you're seeing basically trees per acre increase as we've done those basically investments with the 2.2 million trees. And you also see where the tree counts basically are maturing. And we know that the productivity will come because the trees are in the ground, they're healthy, they're rebounded from the hurricanes, and we're ready to go. But there is one more secret weapon, if you've been following the industry for the last year or two. It's called oxytetracycline. In January of 2023, the federal, it's the FDA, had actually approved for the first time the ability for citrus growers like Alico to inject oxytetracycline directly into the trunks of trees. And what that does basically is mitigate the damage that the citrus greening disease, which has devastated the citrus industry throughout the world, but specifically in Florida since the early 2000s. And unfortunately, it only works for about a year. And it takes a couple of years to really get up to maximum strength. But we injected about 35% of our trees in 2023. We're able to basically measure the material progress in this current harvest season in 2024, and we're impressed. We'll have better numbers for you next week, but it does work. It certainly works on improving the quality. So we look at it from the trees that were treated against the control groups, thumbs up. It was a smart decision. It's also reimbursed right now at the application costs themselves by the state of Florida. So it was free money to us. And frankly, we took more money this year to continue to do that. We're doubling the number of trees that we're doing. So almost all the trees that are eligible on our side, they're thick enough that I can actually take an injection into the trunk itself. We will treat, which we'll see the benefits of that in 2025 season. Why am I telling you this? Because we're getting a lot of pressure from a lot of outside groups to basically monetize the real estate that we have. Let's be basically short-sighted and just sell, sell, sell. If you follow the real estate industry, or if you follow the real estate industry in Florida in particular, you'll know that you only really get the opportunity to sell something once. We would like, if we ever make the decision to sell any of our citrus groves, we want it to go for the highest and best use, which means we want to get the highest and best price. We want to do it in a way that's most tax efficient for our shareholders. We've paid off as much debt as we think we're going to pay off. All the debt that we do have will probably roll over in 2028 or 2029. And right now it's non-amortizing. So we really don't have any principal payments we have to make. We've done a great job of minimizing our debt service. So now the focus really is on how do we maintain and improve the returns that we generate for our shareholders. And the best way I can do that right now is doing our homework. And our homework is called the entitlement process. It basically is figuring out how you can get permitting at the state, local, and federal levels to take agricultural land and convert that to have rights to go into commercial residential property. That does not mean that we're stopping any of our citrus operations. What it does mean is we're very active behind the scenes in doing all this real estate development activities without compromising or jeopardizing the momentum that we have with our citrus business. And the best example I can give you for that is we have a property, it's called Corkscrew. We had announced this last summer. It's about 4,500 acres. It's at the end of a major road. It's called Corkscrew Road, and it borders another highway called Route 82. And it's between Fort Myers, city called Naples, and another city called Lehigh Acres. And it is the last of basically an agricultural corridor that everything else up to this point has been developed for residential or commercial real estate. This borders the major highways and it borders the major roads, and it is the last of the pristine acres that is being farmed. And it's an okay growth for us. We're doing great with it. We've owned and operated for a long, long time. We have some of our best people there, but we are actively involved in the entitlement process right now, which will take several years. But once it does in Collier County, we anticipate that that could turn into thousands and thousands and thousands of homes, probably in a couple different villages with substantial amounts of commercial. And that probably is going to be a little more valuable than $8,000 to $10,000 per acre, which we valued for our citrus operations back in the beginning of this presentation. Looking to the future, basically, we look to ESG not as a trend or a fad. We look at it as part of our DNA. We have been stewards of our land in Florida to the best of our ability for more than 125 years. We're going to continue to do that. We do admire and value diversity, but we also really value best-in-class employees, and the people who work for us are literally the best in their field. We have the best citrus managers, we have the best workers, and we think we've got the best executive leadership for a microcap company focused on, hopefully, potentially much more valuable land that we're showing in our operating history today. So why invest in us? Well, we talked about our financial performance. We've generated more than $244 million of EBITDA over the past 5 years, and hopefully we'll continue to do that. Our pricing in our citrus industry is only improving. We have some new contracts that are coming up. We think they'll be substantially higher when we renew them in the very, very, very near future than where we're currently basically contracted for today. We planted 2.2 million trees on top of the trees we already have, which are healthy. We think that improves the production potential. Our expense base has been rigorously managed since I joined the company in 2015. I mean, within a couple $1 million a year, which is impressive when you consider all the moving parts from fertilizer, fuel, payroll, and outsourced as we need. But we also have substantial liquidity that basically makes sure that we can pay our bills. We got no federal relief up to this point, even though we lost half of our revenue in hurricanes in 2022. Previously, we had a storm like that in 2017. We got federal relief within the next year. We got relief for 4 years after that. Worst storm, 2022, Hurricane Ian, federal government gave us zero. We self-rescued. Proceeds that we used from the sale of that state land last Christmas basically helped us repay some of our working capital, took us down to zero. We had enough money left over. We actually took some, we prepaid some variable rate debt that lowered our cost of funds and basically put some cash on the balance sheet. So we took care of ourselves, and that's the kind of discipline and expertise that this management team has for you as shareholders to make sure that we're going to get through any natural crises. On the capital market side, we are covered by Roth Capital. We do trade about $1 million worth of shares a day. We have strong institutional ownership. We're about 70% inside owned. And we've got 1 or 2 comps, which we could talk about. And we think we trade for about half of their multiples. We don't know why. It may have something to do with the fact that we went public in the pink sheets in 1960 and never really did a good capital markets trade. We don't have a very strong Wall Street following. We do have a very loyal retail base, and we have a very, very strong institutional base that we've acquired by going to conferences and having one-on-one meetings over the last 5 years that really buy into the long-term story. Our real estate story is what we talked about. We've proven our discipline and our opportunism by basically selling off non-strategic ranch land. We did it at premium prices. We were patient, $226 million over 5 years. And we're looking at our citrus assets. As we perform on our citrus, We're going to basically monetize that through operating cash flow. If we have grows that are stumbling or not performing, we probably may find ways that we can entitle that and put it to its highest and best use. Tropicana, number one customer, number one in their brand. We obviously are the number one producer in our space. We have industry leadership. Down on the bottom, we have a track record of giving money back to shareholders. And in addition to our debt holders, we returned capital about $196 million since 2015, both on debt repayments, tender offers, buybacks, as well as consecutive dividend payments. We've also been investing by putting new trees in the ground, but we've experimented with crops like pongamia and bamboo and other types of crops just to see, are there other hemp, other things that are cash cows for the Florida agricultural space. Haven't really found anything that punches the weight class like citrus does, but we will keep our eyes open. We're more than eager to learn if you got some suggestions. 125-year-old company. We're dedicated to citrus, and we're trying to prepare us to basically continue our legacy for generations to come. So that's the Alico story. I'll take any questions. Sir.
What's the average land cost per acre? Your cost basis, and how much you're selling it per acre recently?
So the only acres that we sold recently, a good example of that would be the land that we just sold on the ranch. We acquired that in 1800, give or take. Value of that was really, really, really small. And the sale price that we just realized was about $4,500 per acre. And we had some private sales that were actually contracted after we started negotiating that price, but they closed before we closed that were in the $6,000 per acre. You know, we have acquired citrus adjacent to properties we currently own recently in kind of the $7,000 to $8,000 per acre, but we got the crop with that. We got some fruit with that. And if I was expecting that I was going to sell some underperforming citrus that I was not happy with, that was not making money, I'm guessing I would stick with the $8,000 to $10,000 range that I just quoted you. But again, our basis is very, very low, unless it was part of the acquisition we did back in 13 and 14. That cost per acre is high. It's probably in the low teens, 10, 12, 30.
What are they using? Like a developer building homes?
Good question. So one of the reasons we were so disciplined with the Alico Ranch, its highest and best use was nothing more than recreational, which is hunting, or cattle grazing. It was not well suited for any sort of development. You really couldn't do anything commercial on the property. It was much too rural. So the people that we sold to are using it for either homesteads for hunting cabins or for cattle grazing purposes. The state is using it for a wildlife preserve, and they opened up to the kind of state parks that the rest of the citizens of the state can use it for. Any citrus that we're selling to most likely is going to go for another agricultural producer. Maybe it's peanuts or green beans, but they're going to be very small parcels, nothing on the commercial scale that we currently own. If we did sell to a developer, that means we took our eye off the ball. We would rather keep it, develop it ourselves, or bring in a partner to develop it ourselves, or sell it to a developer ourselves and return the capital back to shareholders. So we cut the middleman out of that equation. Sir?
I think maybe people don't know how to compartmentalize the company and saying, you know, it's almost like you're talking from two sides of the mouth. What are you going to be doing? Are you a real estate company? Where's your real focus? And you're into growing, you know, the oranges for Tropicana. So that story kind of gets muddled.
It does.
You know, a lot of pulp in the story.
Some pulp.
So we got to try to, you know, look for Wall Street. What are your competitors? Are they the same as you, or is this just the whole industry bucketed like this? What's your opinion?
So we have no public competitors. There's really no one in the citrus space, certainly no one in Florida for the juice market that is either on our scale. The next closest competitor is a private family-owned business. It's probably 25% of our size.
You're trading like, you're not trading $1 million a day, but you're trading like a REIT. So that's the type of, okay.
So our story is a little mixed up. I don't disagree with that, because we offer the real upside potential of residential and commercial real estate developments at the same time that we're basically producing operating cash flow as an agricultural business. So you've got the volatility of ag combined with the long-term potential, and we really haven't been able, but we're getting there, of combining those two stories that is crystal clear. The best example I can give you of why we're a little better differentiated than the typical residential or commercial real estate developer is we've got operating cash flow while we're doing all that entitlement work. So we're talking tens of millions of dollars of EBITDA while we're waiting to get hundreds of millions of dollars worth of payout for selling those properties. Our carry cost basically is being basically funded by our citrus operations. But we can talk a little bit more about after that.
Yeah.
All right. We have one more question, sir.
How does Tropicana manage their supply the years, the crop got over the hurricanes?
So previously there was so much fruit in Florida, it was never a problem. But in 2017 was the first time you had a devastating storm that really condensed the supply in Florida. And both Coca-Cola and Tropicana began to go offshore. So they would import juice, not the oranges, but the juice itself from Brazilian suppliers. And they're still doing that today. They just kind of try to minimize or maximize it based on what they think the crop is going to be next year for producers like us. So the reason you can get this on your shelf, even when we have a hurricane that takes out half of the Florida crop, is Brazil has a whole bunch of orange juice that they need to sell. They basically export, I think, 98% of what they produce. Everything that we make in Florida stays in the United States. That's what we're told. We have one more question, then we got to shut. Yes, sir.
Can you say again, just on the recovery from 2022, say that again, that's still...
We're waiting. We were disappointed. We have earnings coming out next Monday. But up to this point, the crop for this season, which just finished harvesting basically last Friday, did not get back to a normal level. It was getting closer and closer to normal, and then basically the season ended. So we anticipate that we've turned that page, and the crop going forward will return to more normal levels of production. What I did say is we've cleaned up our own balance sheet. So we cleaned up all the working capital lines that we had to basically put in and basically use to fund our operations because we had less revenue for the last two seasons. We took care of that.
Okay, that or insurance.
We've got nothing so far. We did have crop insurance. We got that back in 2023 and 24. And that's all gone now. And you're not seeing any of that into this current year. We're here all day tomorrow. We're here all day today. Thank you for your participation. Have a good day.